USA. The reason why it is not popular in the USA is because it's illegal in the USA. What you need to know is I don't pay commission or exchange fees when I trade. I trade on 200 to 1. I trade on fixed spreads. Dow is always 1 point fixed in hours. S&P 500 is 0.14. You trade on 0.25. And NASDAQ is 0.8. This is in trading hours. Now, what I have found is by looking at the live S&P 500 futures prices that I have running side as well, is that the prices that you will have on your S&P 500 futures will be 13 points higher than the price. Someone was not allowed to. Okay, there you go. Okay, I don't want to see this every single time, so thank you. S&P 500 futures higher than CFDs by 13 points. Dow futures are higher than CFDs by 60 points, and NASDAQ futures are higher than CFDs by 60 points. If there's I want to show you here finally with 3 minutes to go. What I want to show you is here's the S&P 500 future from the 19th of September. I sat and listened in, and here's the prices that I see on my S&P 500 cash prices. So what you should see here, ladies and gentlemen, is that they are 100% identical. All right. If the market gets slow, I prepared some educational slides. Okay. Enough for that. Let's get back to it with 3 minutes to go. So here's the Dow Jones. It's currently trading at excuse me. It's currently trading at 29,500. So if you're trading futures, it'll probably be trading at 29,560 thereabouts. I have positions going on in the FTSE, so that's why I need to refer to that. And then here's the S&P 500 cash chart. It's currently trading at 2680. This is a 15-minute chart. Here's a 5-minute chart. It's 2680. So you will probably be at 2693 thereabouts. Okay, so here we go. I'm sorry for the delay. I thought that I had to log in with the link that I was sent to me last week. Turns out that I wasn't. Can I show camera? No, it doesn't look like I can do camera. Never mind. So on the 15-minute chart in the FTSE, you got a lot of overlaps. Buy bears, bull bears, bear bars, bull bars. And this is a mind boggle of a party. And no one is making money from this. Well, maybe the scalpers. Over on this chart over here, I got the NASDAQ. So I may also call out NASDAQ signals. We are opening in 10 seconds. That will also give you a latency test. Once this bar here changes to a new bar, bang, there we go. It is 30 minutes past the hour. And we are good to go. Stand by in the Dow. I'm looking to sell short early. I'm still going to post the signals in my own Telegram group. It's kind of just keeps me accountable. Just for your benefit, I want to show this. On the S&P 500, they seem to be moving in sync. I always look at the Nasdaq side by side with the Dow. Always. Nothing done yet. Had a couple of people mentioning that the volume isn't very good. The sound quality isn't very good. Nothing done yet. Oh, and the Nasdaq on the 30-minute chart, you have a triple top here. It's not matched by the Dow, but it is matched by the S&P 500. So stand by for a short position in the Dow. I don't want to see that message. I'm just going to have to write a message to my Telegram group. I just wrote that it seems that the group has a limit of 1,000 people and it's full. So we had the first 5-minute bar. It's actually bullish, but within the context of a trading range. So reason why I haven't called a short yet is because the Nasdaq is firing on all cylinders. And the SPOOs are stronger as well. What is positive as well, which makes me a little cautious, is that the FTSE and the DAX are also pushing higher. But looking solely at the S&P, I should be long. Looking at the Dow, I am contemplating shorting. I'm shorting the Dow here at 46. I'm shorting the Dow here at 46. And I got a stop loss about 50 points away. I put it at 599. So whenever you have an index that is unable to rally when everything else is rallying, that's a good one to short. I simply just short it up here. Okay, stand by. Move stop loss to 29.5, 60. Stand by to add to short position. Stand by. Stand by to add to short position. Next 5-minute bar will close in 2 minutes. Okay, got 50 Dow points in profit. Gonna try and get the 5-minute bar to close, but still in the context of a trading range, I'm just supremely bearish. You don't have to share my bearishness, but I am. Nasdaq is actually doing well. So moving stop loss to 29.546. Actually just stop loss to break even. If you're asking me questions, I am unable to see questions and probably won't entertain questions either. This is my first stream with Al Brooks, and I'm a little bit out of my not comfort zone, but my technical comfort zone. So I just need to make sure I focus on doing what I need to do. Stop losses at break even. Okay. Okay, close half here, close half. Close half here, about 88. Here's the next 5-minute bar. I still have half running. When I trade 100 pounds a point. So for me, that's just 7,000. And half of that. Okay, so that was plus. Love to hear and see if the American traders that are futures traders, if they manage to get anything like this. Okay, so we're still in the context of a trading range, but we sold the top of the range. What bugs me here is that I got an S&P that's pushing to a new high. You got a Nasdaq that's trading towards new high. So that's my primary reason for not adding aggressively, is that I don't feel that the other indices are collaborating. I also look at the Dow. Sorry, I look at the DAX in Europe, and I look at the FTSE. So here's what the FTSE is doing for the morning. Always annoying to see an index going up when you're short, isn't it? Okay, I'm probably going to be stopped out now. But I am not stopped out. Stop was at 46, I got a 42. So here we go. This is a good sign that we're coming all the way back. I would want to sell short Dow again if we get down to about 84. So this is good. I'm also getting a reversal in the NASDAQ. So if you look over at the NASDAQ, you'll see that it too is just, yeah, it's not a reversal. Absolutely not, because it is just a retracement. And the same with the S&P 500. Let's just look at the bigger picture in the S&P 500. So sorry, I missed my short add-on entry in the Dow, but I just need to explain something to you. So what you're seeing here is this, the S&P 500 is at the top of the trading range. And we're currently short from up here. And we are currently about 100 points in profit on the second half. Okay. I'm probably, I don't know, but I sat and listened into Al Brooks and a gentleman called Tim and Rose. I'm not sure I'm that kind of educator. I just don't use all that. I don't use an encyclopedia because I feel that I can't have a too deeply entrenched preconceived conception of what the market is going to throw at me today. I need to be able to flow and roll with the punches. Okay, and that is with the greatest of respect to these people. We are at the bottom of the range, so I will probably, shall I not? It's always the thing, isn't it? When you've seen lower prices, you're like, it's like a little bit more. I'm closing the Dow here about 76, 77. Okay. This is the S&P 500. And here's the NASDAQ. Definitely a disconnect. NASDAQ seems much more resilient. I got a message from my friend Lenny. He says that everything is okay, so that's good news. All right, we're at the bottom of the trading range, but you know there's a saying, and the saying goes that in bull markets, resistance is broken, and in bear markets, support is broken. We are firmly in a bear market, so not keen on buying support, rather sell resistance. I have this working theory, and I use the word working theory, is that in order for a trend reversal to take place, you do need to see a battle of some description, and I haven't seen it yet. All I'm seeing is the S&P just pulling back from the highest of the day. Problem here is that that high actually could be a triple top. So it's very plausible that we need to be sellers in the S&P around the 90 area, and you need to add 13 to that. Let's see. Prefer to have a good old pattern. The fact that we closed below the prior bar's low doesn't count for so much when this in itself was the high bar. This bar, this last 5-minute bar in the spruce was in itself a high bar. So it's just a 1 bar pullback. And in a bull trend, you buy 1 bar pullbacks. but I'll be damned if I'm a big buyer today. I need to see some real clear evidence. Having said that, see the evidence over in the Nasdaq. And so those two indices, they are the Nasdaq versus S&P 500 and Dow. They rarely truly disconnect unless there's a real specific story in, say, Tesla is up 40% of earnings or something like that. Then one particular stock can really drag an index in one direction or another. Okay, so we are approximately 3 5-minute bars into the trading session. So far, we got two bear bars, and we got a bull bar, and then got two bear bars, and truly still within the context of a trading range. I colored my cursor purple with a slightly larger arrow. I thought that might make it easier for you to see. Nasdaq is making new highs on the day. S&P well on its way. Dow is not. So no open positions currently. I'm actually, for your benefit, analyzing the S&P chart rather than the Dow chart. I came into this trading day today thinking I need to be careful. It's Monday, extremely bearish week last week, but then a fierce rally in the final hour on Friday. And what's interesting was that was 2 standard deviations from the mean. And that is pretty much where all the option houses are sat. So there's probably a few concerned desks that'd like to see this go higher. And if that's the case, we may have to just jump on board. And that's fine. I can live with that. But if it fails here, Stand by on the Dow. Get ready to sell short. I think the volume just cut there for a sec. Never mind. That'll be all the opportunity. Stand by. Stand by on the Dow. Ooh, it's tricky when one index is marching higher and the other one isn't. At least it is for me. So we have two 15-minute bars completed. We have a very strong bull bar. But we're also double topping in the S&P right here. Double topping right now. Just going to attend to these messages. It's like someone thinks it was a good idea to start asking me a technical question in the middle of a session. Nope. double top in the S&P, larger time frame. Stand by in the Dow. I'm shorting the Dow here. Okay, so short Dow. At 29,506. Okay. Click half here at 65, 66. Stop loss to 29, 5, 5, 10, 12. Okay. So plus 40 on. I'm closing the other half here at even. Close the other half here for plus 6. So plus 46 in total, 40 on half and 6 on the other. That's the way I trade. When I feel that there's a momentum move, I'll add aggressively. If I feel that the market is stalling, I'll simply just trade the ranges. And here I was, here we go. Basically trying to change this spaghetti junction, whatever this is. And I made 40 points on half the trade and 6 on the other. So 46 divided by 2, so 23. Sorry. What pains me a bit is I can't see your comments. I have no idea what people are thinking, if you're liking this or not. But maybe that's a good thing. Maybe I should just shut up. How long am I supposed to do this? Because I'm kind of ready to go surfing now. Just looking at the structure of the S&P 500, every single beta bar gets bought up. But what's holding it back seemingly is Dow's inability to rally. But everything else is rallying. FTSE is rallying. Nasdaq is rallying. DAX is double topping on the 15-minute. I'll show you these. Here's the DAX 15-minute chart. Clear as anything, it's the top of the trading range. And this NASDAQ, well, you probably got NASDAQ yourself. It's the hourly NASDAQ. You can see this. It's just a lot of fresh air above. Two strong bull bars on the hourly past the first 30 minutes. Pretty good. I hope that in spite of us trading different instruments, that you're still able to get something out of this. If you want me to, I can just very quickly show you this again. So you will see your S&P 500 futures are 13 points higher than the S&P 500 product that I'm trading. And the Dow is 60 higher than the product I'm trading, and the NASDAQ is 60 higher than the product I'm trading. Okay. We can go through this education later if we want. It's always interesting to run a live trading room. I run one that's free of charge, and yet that doesn't stop people from complaining. You say the ratio of complaints is about 2-to-1 to the thank yous. And it's incredible what you get complaints about. Some people complain that I'm not trading like I was trading in the book that I wrote. Other people are complaining that they can't get the entries that I'm getting. Yet when I run a survey, 85% of people saying that they're getting the price I'm getting at plus minus a point. Because it's just human nature. When things are going well, we take it for granted. And when things are not going well, it's good to have someone to point fingers at. Dow's breaking down now. You can sort of visually see this this beautiful channel here on the 5-minute. Not a big fan of drawing trend lines, but you can see that there would be support here. So I'm just looking at the FTSE. New highs in the spruce. Well done. Seems like we all get something. Those who are bullish, they can be bullish the S&P, and those who are bearish, they can be bearish in the Dow. Hmm. So now we got new highs in the Dow as well. All right, gotta accept that. My idea of a nightmare. A runaway market after you've been on the wrong side. And you're thinking, how do I get on board? Hmm. You may ask, why am I not just buying? Well, I'll tell you why. Through the research on my own emotions and correlating it with my trading performance, I have found that when I eventually get my psyche around to actually do buying after I've been bearish, and bear in mind that I haven't had a losing trade, but I have analyzed my way to the point where I say I shouldn't then participate in this until I've had just a mental break from it, or had an opportunity, or I get a better signal. Just joining the trend just doesn't work for me. This, oh my God, I just gotta be in, this fear of missing out. And in my opinion, when I follow the impulses of, oh, I'm just gonna get in, I tend to lose, because it's a decision that is based on emotion as opposed to a setup. But yeah, you as a trader, your job is to make money, and you sit there and the market is zooming ahead. You might even have a few friends on a bulletin board or chat group saying, why didn't you buy when I told you to, etc. And you feel inferior. And it's important to remember in those instances that a trading life is not made up of one day. So chill. There will be other opportunities. Another aspect to bear in mind is that most traders will have a trading environment that suits them better than others. At least personally speaking, I know that I like to short markets. I can also be long, but I do like to short the markets. And when the market then is sort of in a runaway bull mode, that's when I tend to be left behind. And that's just the way it is. But I also found through analysis of my trades that if I'm just patient, just being patient, I will be given an opportunity. So it all boils down to believe. You just got to believe that you have every single angle covered. You don't need another seminar, another book. What you really need to do is to accept and acknowledge that, hey, this is perhaps not my ideal trading environment. And now I'm just going to wait for the right kind of environment. And there's absolutely no shame in that. Well, there is a shame in this placing a trade just based on hope. Truth be told, and I'm telling you this, God honest, I was hoping that the markets would rally. And I'll happy to share with you why. I felt that we by no means are out of the woods. We are entrenched in a bear market driven by, hey, take your pick, Russia, inflation, higher labor costs, you name it. In the Asian countries, a rising dollar, interest rates always affects developed countries harder, because they have to spend more money to service their debt. And having a rally like this, it may just be a short-lived rally, maybe it'll last a week, but it's not a bad one. It's not a bad time that it came, because this market was getting nervous. I was short over the weekend and I was short during the night. So if I'm sounding a little jaded, it's because I traded half the night and I've traded currencies as well. It's not often that you get a 300 pip move in a currency during an overnight session in Europe. So we have two trades, two winners. We're up about 100 Dow points, and the market is motoring higher. I am taking a 5-minute break. Just going to rest my voice for a sec and get a drink. Okay? 5-minute break. Okay, I'm back. So it looks like you have a pretty decent breakout in the Dow. So I'd like to be a buyer of retracement. Oh, hey, I may change my mind. On the hourly, it's still a trading range. The S&P. The S&P looks better. Structurally looks better. Hmm. They're not giving many invitations to buy in today, huh? Not even past, not even buy below prior bars low or anything like that. Yeah, the S&P did. Sadly, I follow the Dow. Look at the S&P. It actually did give you that opportunity to buy below prior bars low. I'm sat there looking at the Dow. Maybe I should start looking at the S&P more. There's the one in the Dow. Stand by, please. Stand by. Come on. Oh, I'm just remembering I am not in my own channel, so I can't swear like I normally do. I was also told not to tell any jokes. I am under strict orders from Al Brooks not to tell any of my usual jokes. You have an issue with that, you take it up with the God himself. That's Al who's God. Nothing to do with me. I'm just following orders. We are an hour into the trading session. Dow is actually only up a handful of points. Nasdaq is the real strong one. You may say, why don't I buy Dow now? Because I don't want it the second time around. I wanted it the first time around. Because if it comes down to the second time around, it's like, not as good a purchase. I think I have a little bit of stage fright. Huh. Stage fright in the sense that I'm here and I want to quote unquote entertain, and yet I'm not finding that the market is playing into my strengths. So I'm telling myself, just wait, just be patient. There will be an opportunity. But I'm actually quite enjoying this. I wasn't sure if I would. Streaming, talking. The advantage that I have over at my other channel where I do signals is that if I don't feel like there's anything, I just don't say a word. But I feel that perhaps speakers here in the channel feel somewhat obliged to have a continuous audio stream and comment. I sat and listened into 3 other speakers, Al, Rose, and Tim, and I just concluded I couldn't do what they're doing. It's like this is just not my style to talk that much. I don't mind talking, but I need to concentrate when I trade. In other news, I have a small position in Bitcoin. It was the absolute smallest position I could find, and it was just so I was able to keep an eye on it. And right now I am losing $50. I told you it was small. This is one of those I don't actually have to look for the Bitcoin symbol on my platform. So, okay. Don't follow me on this, please. Please don't. I have absolutely no qualifications for trading cryptos. Can't help but think that perhaps this market is not as strong as it portrays itself to be. I prepared a few slides. Have a lot of time for Al Brooks being have done this every single day for years. I mean, one thing is to give live trading signals, which is what I have done for the last 4.5 years, but then to also talk. I think I could do that. I hope you're not too disappointed with this. My job is to make money, first and foremost. Education is secondary, so I accepted this invitation on the proviso that I wanted to trade. Stand by. Stand by. I need to short this. Stand by. I'm looking at the Dow, just so you know. Stand by. Please. Just be patient. Come on. I'm going to short it. I'm trying to get everybody to see the same price. And I saw 50, which was like the ideal. Come on. There. Shorten the Dow here at 50. Close half here with the Dow in about 35. Close half in Dow. You're going to get 37, 38. Move stop loss to 29.5. Let's just do 60. Because if this scalp is going to work, it's going to work quick. Because you got the NASDAQ falling below prior bar's low. Problem I got is that I haven't got the follow through in the, okay, stop to break even. Got 30 points, 20 points in profit. 25, 30. Ah, come on, fall. Come on, you fucker. Get the fuck down. Never in doubt. Ooh, shit, I just swore. I'm sorry, Al. I'm sorry, everybody. I'm sorry. Sorry. I'm really sorry. I swore I wouldn't swear, and I swore. I'm so sorry. Oh, crap. Sorry. I'm closing the Dow here at 15. I had to spend some time. I wanted to take profit further down, but I had to send a message to Al Brooks and say I'm sorry. I swore. I see that I have lost 25 people out of the 1,000. Yeah, me and my potty mouth. But anyway, since I don't know what the questions are, I can't really answer. So, oh. Do you understand why I took the position? That's more important, isn't it? Okay, 3 trades, 3 winners, about 150 Dow points in profit. Hopefully that you were able to get them as well. I suppose I should have told you why I did what I did. Ooh. Okay. Okay, I don't know if you'll get this lesson, but what you need to do is you need to understand that this is a trading range. Yeah, this is a trading range. Then we broke above the trading range. There was no real fight. Then we came down here. And I thought, okay, here's the fight. But then when I zoomed in on a 1 minute chart, I thought, whoa, what is going on here? So down here, I'm telling you, we need to get short. And then we got short right there, right there. And then we got out here. Actually, I wanted to get out here because you get about 60 points and you think, oh, that's not bad for a nice little scalp. Problem here is I had to write an apology that I swore. Some people are very insensitive to swearing. I, on the other hand, am from Denmark, and we seem to not give a fuck. Right. I think I've done my job. Free trades, free winners. Try to explain. Are there any questions? And if there are, how do I see them? I don't know, man. Richard, Ken. I'm sorry if you're gonna. Okay, this session is being recorded. Now I'm trying to figure out what to do. Question is in the Discord group for the third time, fourth time. Right. Discord. Okay, I'll find it. Discord. Hey, Lenny, do you know where the Discord group is? No, me neither. Okay. I think I found it. Excuse me, ladies and gentlemen. I'm just going to. It says it can't find the message, Richard. Discord. Yeah, I'm clicking on your link. Nothing happens. Okay. Link at the top of the page.
Hey, Tom.
Yes. Who's this?
This is Rose.
Hi, Rose.
Hello.
Oh my God. Hey.
Okay, so I think I'm gonna read some of the questions for you.
No, I'm in something called Discord. Discord. I'm in.
Oh, okay. So you found your rabbit hole. Okay, great.
Yeah, I think I did.
Okay.
Oh my God, it's so good to hear from you.
Yes.
You're
Yes.
doing a
We're having a great time with your
You're doing a
commentary.
much better job of this than I am.
No. Okay, I'm gonna go mute now. So now that you can see it. Okay, people
Okay.
post your questions.
Okay, you may have to guide me through. Where do I go now?
Okay, so
I just got
there
a
is
lot of.
something called Trading Room Chat. Trading
Yeah.
Room Chat.
Okay, I'll find it. Yeah, I got it.
Okay, so
Oh, I
scroll
think
down and then you should be able to see.
yes. Oh, wow. Hi. Jesus. Wowzers. There's a lot of wowzers. High price action, Rose. That is an alluring picture you got there, Rose. Okie dokie. Da 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 da. Okay, there's a lot of questions. I don't know. You know, I get asked questions like, do you focus on day trading or swing trading? I just focus on making money. And if I feel the market can carry a trade, I'll hold it. If I don't, he says he trades CFDs 100 pounds a point. Can you trade 1,000 pounds per point and still face no Ray game? The 100 is the absolute max that I can trade. Tom, why don't you feel qualified to trade crypto? Isn't price action the same? Yes, that's a good question, Forrest Gump. Yes, a really good question. Technically, you should be able to trade anything, shouldn't you? But if you look at my track record in the FX market this month, you'll be thinking, Jesus, what an amateur he is. I mean, I know I have a 200 pip roller right now, but I have had a really tough month, really tough month in FX. Okay, this is brand new to me, this Discord. But Discord is distracting. It's really, I got this beep in my. Hey, Rose, maybe I can just practice this a little bit. I feel that either I trade or I answer questions. I don't think I can do what you do. You are clearly much better at this than I am. I got this.
Well, I have practice, but I can read the questions as they come in.
Yeah, okay. Yeah, I think I'm gonna have to turn this off.
Yeah, okay.
There you go, off it is. Okay.
Hi, Tom. Could you please explain your trade at roughly 3 p.m. short on Dow?
Okay, let me just quickly go back. Yeah, 2 minutes past 3. Okay. Let's go to a 1 minute chart just for laughs, because then it's easier to see exactly where I entered. And you can see my cursor. And we went short. It was 2 minutes past. Okay. Do you see that candle right there? This is textbook support and resistance trading. And then, guess Al would say that's an inside bar on a 1 minute. And I executed a short trade as momentum began to gather here. So right where I am right now. And this is nothing more than a resistance was rejected, and I shorted it down here. Rose, I want to tell you a story, if you don't mind.
Please go ahead.
I worked on a broker floor for 10 years of my life. And during those 10 years, I saw millions and millions of trades executed by about 35,000 traders. And one thing that I noticed was that people seem to have an aversion to joining a trade late. So if they didn't get the very best entry, they wouldn't get any entry at all. And one thing that I took away from those 10 years was that I shouldn't be afraid of selling. I didn't need to sell the perfect tick. I could sell a little bit later on here. So this entry here certainly isn't the best entry in the world. I shorted it at 506, but actually that's 46 Dow points lower than the ideal entry, which would be about 50. But I suppose I was just waiting for that little extra because I'm here with you and I wanted to look good for the first time. I waited for some extra confirmation. Yeah, there you go. I hope that explains it. I basically feel that price action is a tool that we use to read the market. It's like we're out walking in the jungle, or use your own metaphor to your liking, but we are somewhere and the price action is our guide, is our compass, is our map. But we still need something entirely different to trade well, and that is our mental game. And it is the reason why I wrote the book Best Loser Wins, because I felt that there was this emphasis in every single conceivable camp of the trading industry. And it's perpetuated by the brokers themselves that provide education. But what kind of education do they provide? Well, they provide technical analysis education. So as traders, we are lulled into this sense of, well, as long as I know technical analysis, the holy grail is intact, and I'll be just fine. But I have a very different perspective because I spent 10 years on a trading floor, and I observed so many people with the best of intentions still ending up losing. And it felt to me as the body, our minds always seem to want to do the wrong thing at the wrong time. And I believe that's chemically induced by the serotonins, the adrenaline, the cortisols in our bodies, because fundamentally we have a fear-based mind. It's a mind that reacts quite vehemently to fear and the stimuli of fear. And so I'm not, I mean, when I observe you and Tim and Al do your craft in these live trading rooms, Richard sent me the recordings so I had an idea of what to expect today. I was saying to myself, there's not a shit in hell I can do what you do. I simply cannot do the Fibonacci extensions and then the targets and Tim measuring here and you guys, price action so much better than I could ever dream of knowing. But I have spent a disproportionate amount of my career focusing on a different angle to trading. And so if you don't mind, I'd like to tell you a story. And I hope that your audience will forgive me for sort of, branching out a little bit here. But I organized an event in London where I invited Al Brooks and Larry Pesavento was there, David Paul. And then I felt we need an antidote to the technical analysis. So I invited a gentleman I've known for 20 years now, Steve Ward. Steve Ward has written 4 books on the psychology of performance enhancement. And I'm not talking about drugs here. And he came on stage and he's quite an imposing character. He's very tall and, very well built and solid. So he's rather imposing. So when Steve speaks, it's a bit like Tom Cruise. He locks you in and then you listen because he's got something to say. And he was starting off by saying, and there was about 130 people in the audience, and he started off by saying, hey, by show of hands, how important do you think trading psychology is for your trading? What you think when you are in the trade or not in the trade. How important is it? Say that you, say in the ratio to normal technical analysis, how important is the mental aspect of your game? And then, I thought I'd kick it off. So I said 60%. And then it became a bit of an auction. Someone said, I think actually the psychology of trading is more important than the technical. So I'm going to say it's about 70%. And sort of by common consensus, we agreed that trading psychology and how we think, our will to act on the knowledge that we have acquired probably accounts for 80 to 85% of profitable trading. And then Steve Ward said, and this was the real killer of the talk, I felt. He said, if you all believe that the psychology of trading accounts for about 70, 80%, why do you spend less than 1% of your time training your mind? And you spend 99% trading on all sorts of scenarios. What good are all those scenarios? I say, what good are all those scenarios if you're not able to act upon them? And I feel that's the overriding message here, that I am by no means the best price action analyst you'll ever come across, but I'm someone who has spent probably a lot more time on how my mind works when I'm under pressure than other people have. So when I do mess up, and of course I don't have a hit rate that is so much better than everybody else, but I do have a rock solid understanding of my own frailties and my own flaws. And that's important because one thing that I learned when I was at the trading floor for those years was that it is intelligent, well-educated, well-funded people, and they still mess up, but it's not, they don't die from 1,000 paper cuts. It's always 1 or 2 or 3 trades that really blow their accounts. And I will simply just not let that happen to me. So I felt that was an important story to get across.
And we're glad you're sharing with us.
You're welcome.
Next question. You have time, right? I mean,
yeah. I mean,
okay.
No, I feel that the markets are no. I think I mentioned it earlier. I don't feel that these markets are as strong as they portray themselves to be. I got a very clear sell signals on 5, 10, and 15-minute time frames now. It's like there's this saying we used to say on the trading floor: they take them up to take them down. And we had this cynical way of looking at the world when we were floor brokers, that we just said, look, they just move the market up to the areas where they can fill the orders, because that's the job of the market. The market is to maximize the ranges to the fullest of extent. It's a cynical way of looking at our industry, but nevertheless, there's a lot of truth in it. Yes, Rose, I do have time. Anything for you. Anything for you, girl.
Oh, right. Okay, so I'm gonna read this question. Does Tom focus on scalping, or does he do swing trading too?
I do both. I think I mentioned just moments ago, I don't necessarily go in and say, today I'm going to scalp. Rather, I go in and I gauge what the market will give me. And if I feel that we are in a trend, I've identified a handful of areas where I feel that we can have a trend day. They're almost always inevitably linked to a gap situations. When you have these, what I call trend days, which happen 1 day out of 5, if you analyze 100 trading days, you'll see that 20 of them are really clear-cut trend days where the market opens in one range and then it closes in the other. Those are the days where I truly make my meaningful money, because then I'll add to my winners. I have 2 overriding principles. I'll never, ever add to a losing trades, but if I feel that the market can sustain it, I will add to my winning trades. And it's interesting because all the millions of trades that I watched over a 10-year period, I say that out of those 25, 35,000 traders, there were only perhaps 5 traders out of 30,000 that added to their winning trades consistently. A lot of people add to their losing trades consistently, but the people that add to their winners, they are rare. So swing trading, day trading, I just try to make money.
Okay. All right, so the next question, any reason he doesn't use any moving averages? I think we already heard that you said that you come from the institution side. So I think that kind of explains why you won't use those.
But you have to understand that institutional people aren't good traders. They're just really well paid. And they make money from other people. I was just about to swear again. They make their money from other people messing up rows. That's what brokers do. They're not brilliant traders. They just sit there and laugh at their clients' idiosyncrasies. Isn't
Yeah,
that scary?
yeah, it is scary. That's what we
So,
know.
so moving averages for me, it just doesn't represent anything. Look, I don't mean to go against. I hold the talents of Al Brooks in extremely high favor, in extremely high respect, but doesn't mean that I agree with everything. So the whole idea of a 20 period moving average or exponential period moving average on a 5-minute graph, sure, he may have had something, but Al Brooks is suffering from something that I call patternicity. And patternicity is a psychological phenomenon whereby we see patterns in something and we tell ourselves this is what has happened. And patternicity is not a bad thing either, but it's like the French philosopher saying we don't see the world as it is, we see the world as we are. And so we have conditioned ourselves during our formative years in trading by using a 20 period moving average. Well, then this 20 period moving average is going to tell us some facets that we can identify cognitively. And that's the use of an indicator. Isn't because there's a magic potency to a 20 period moving average over, say, a 21 or a 19. It's merely just my first mentor. He said something really interesting, and I love repeating it because it's his words. It was a gentleman, an Australian called Bryce Gilmore, and he said, "You don't see on a chart anything but what you have trained your eyes to see." And that to me is gospel. And so you witnessed me trading live today, and I happen to focus on the Dow Jones. Maybe I should spend more time on the S&P 500 because today has also been interesting for me to observe the two side by side. Having said that, all you saw me do today was the collective sum of all my experiences using price action. And as you could also see, I certainly had flaws too. The market was rallying without me, and I was very honest to say, hey, I feel like I should be long here, but every single time I chase the market, it always ends badly for me. So I'm not going to do that.
So then this answers, say, if I want to ask a follow-up question here, you won't be looking at wedges, triangles, high ones, and high twos.
Maybe you and I could have a private consultancy session because I'm still struggling a little bit what a H1 is and what a H2 is. And I certainly don't do triangles and wedges, etc.
Gotcha.
Rather, if I can show you something here on the screen, can you see my PowerPoint right now?
Yep.
Yeah. Now, I didn't know how today was going to go. Rose, you gotta trust me here. I had no idea what this first time was going to be like.
You sounded nervous. We didn't understand why you were nervous. I mean,
Of
you
course
just
I'm
do
nervous.
perfectly
Of course I'm
fine. We're
nervous.
happy that you're here. So
Of course
don't be
I'm
nervous.
nervous. I'm in the company of professional traders, and Al Brooks is my hero. So of course I'm a little bit intimidated. Well, maybe that's just my own quirk, but I am, because I wanted to do well. I wanted people to walk away from my session with a good experience and have made money above all. But what I wanted to show you was that I prepared some slides yesterday. I spent about 3 or 4 hours on these, and I was wondering, there's 9 of them. Would you mind if I went through them?
Sure, go ahead, please.
Okay, so if I think what I can do is, I think there has this, yeah, so they got this laser pointer. So as a day trader observing a short time frame, such as the 5-minute chart, we are not often witnessing sudden reversals, except if a piece of planned or unplanned news has surprised the market. Rather, we tend to get retracements as opposed to trend reversals. Al Brooks, in my mind, has summed it up so well when he says that markets suffer from inertia, which in this context mean, and I'm borrowing a phrase here from market wizard Linda Bradford Raschke, when she said the odds of the trend continuing are higher than the odds of the trend turning. So in this example here, where I've circled the FTSE, I'm witnessing a hard rally off the open, which then undergoes a retracement before rallying. It does beg an interesting question. Under what circumstances should I expect a retracement, and when should I bet on a trend reversal? In other words, when is a retracement just a retracement, and when is a retracement a trend reversal? And I think that's one of those questions that we're all suffering from at any given trading day. Is should I be betting on a trend continuation, or should I be betting on a reversal? And so, in my opinion, and I'm struggling to put my thoughts into words, I admit, someone needs to be proven wrong. A battle has to be fought, and someone has to walk away victorious, and someone has to retreat and lick their wounds, which in this case would mean someone has to scramble to cover their losing position. The circle you're seeing is not a reversal, in my opinion. Yes, we have a candle bar that has closed below the low of the last 6 bars, which is this one here. But where's the battle? Was the battle fought in the trading range here? Some would argue, perhaps, but I'm not convinced that it is. There's a bias of bullish traders, hence we have a trend higher. Otherwise, the market would not have rallied as it has all morning, now 2 hours into the trading session. Yes, you can argue that the bulls are having their argument eroded, but where's the identifiable battle? I don't see it here. This looks like just another retracement. So the FTSE is trading a little lower, then reverses back up again. For all intents and purposes, we are headed for new highs. It was just the retracement that we saw here. There was no battle, and that's the important bit. There was no one who had a real fight, which manifested itself as a candle or bar that went to say new highs, but then closed at its lows. There was no surprise. There was no one who went, oh, shoot, this doesn't look good. As this chart unfolds, you see 2 identical retracements, more or less, and you would expect at least a test of the highs. But then this bar happened here. And these are the things that I constantly look out for. The bar went above a prior buyer bar's high, and then went and above this tiny micro double top just before, and it closes on its lows. So whatever happens from here is probably still 50-50, perhaps 60-40 in the bear's favor. However, my studies of short-term movements suggest that when one party, the bulls or the bears, are caught wrong-footed, you should be alert to a trend reversal move. There was a battle here. This was the opportunity for the bulls to take us to new highs, and there was a winner, at least in a microcosmos. Of course, you can't draw a conclusion with empirical evidence, and much of what we do can't be tested. You trade from our guts. We sense how the market reacts at certain price levels, or in my case, I sense who's nervous and who's in control. It's all based on my interaction of the bars and how they dance side by side. I'll show you a few examples of this battle setup. So I'm arguing that you got a battle here. This was supposed to be a retracement, but right here, where the laser pointer is right now, is why I say the battle was lost by the bulls. They had an opportunity to take us up to new highs, and they failed, and we closed on our lows. And my job would be to sell short here. And incidentally, these are trades that I placed in my Telegram group. And then we get a move like this. I wish I caught all of it, but I didn't. Another example from the FTSE from the day before. All of these examples are from 2021 because I can't deny that I'm a nerd when it comes to charts, and I study charts quite intensively also in the weekends, and I just happened to have gone through the month for 2021 in my studies. The index has traded up, then sideways to lower. That's what you're seeing here. And then this bar here, I'm always mindful of a bar that makes a new high above a trading range, or what I call it, a micro double top. I think that's directly stolen from Al Brooks. And then the battle is fought and it's lost. and then we see a sell-off. So I need to see someone coming out of a battle. And so if you just relate this, let me just finish here for a sec. So if you relate this to what we are seeing right now in, say, the Dow Jones, what you're seeing here, if you follow my cursor right now, you have a trading range right here. Then you have a breakout bar, and my trading setup is that if you trade above a trading range and then you come down in midway through to the range, you need to sell short here. This is the place where I sell short, and this is what you have witnessed me doing today. Wonder if I can. And so here's a couple of more examples. This is completely identical to what I just shown you, but this time it's on a 5-minute chart. You have a trading range, you have a break up, and then you break down. And I believe that that's the defining difference between a retracement and a reversal. It's probably not the only defining difference, Rose, but I don't use Fibonacci to identify these because I find them to be unreliable. And as a trader, what I like to do is to look for those places where I think, whoa, someone's going to get caught here on the wrong side. And you saw that practically every single position that I executed with you live today, they more or less went in my favor immediately. I had very little movement against me. So that's what I live for as a trader, moments where I feel someone is wrong-footed and will now scramble to cover their position, thus adding fuel to a trend reversal. I can sum it up as markets don't often reverse without a battle at some point between the bulls and the bears. Some would, of course, just call it double tops and double bottoms, and they're right. I'm simply adding a layer of nuance to the argument. I've created a simple room for trading it, and in my channel, I prepared these slides for my Telegram channel. We have traded this setup at least 100 times in the channel.
Mm-hmm.
So,
okay.
So,
one more question. Actually,
yeah,
2 more questions. Tom, you appear to favor Dow over S&P, as do I. Any reason for that favoritism?
Yes.
Is asking.
Yes. So first of all, I don't know if it's come to your attention, but I trade CFDs, which is a product that is not available in America. But the advantage that you have with CFDs, being it's a synthetic argument, a synthetic product, is that as long as the broker is okay with it, you don't get any slippage at all, none. Secondly, I can trade the Dow at 1 point, and I can trade the S&P at 0.14. I believe that you're trading at 0.25 when you're trading futures. So by any stretch of the imagination, since I don't pay commission to execute my trades and I don't pay any exchange fees either, I am economically better off by trading CFDs than I am trading futures. Yeah.
Okay, very good. Now the next question is, Tom, how do you determine when to get out of a trade?
Badly. Badly. Some days, and it's very psychological, some days I am feeling very aggressive. My testosterone levels are high. I feel like I want to really push the trend aggressively. Other days I'm more timid. Maybe I haven't slept well. Maybe my blood sugar is not so where it should be. So I can very quickly sense, yeah, today is going to be an aggressive day. I'm in the mood for it. As opposed to, no, I'm not in a mood for it. And I know it's not the answer that the gentleman or lady that asked the question wanted. They wanted some kind of technical reason, but so much of what I do is based around a pit trader style mentality. There are times when I will add aggressively and I'll be short 600-700% of my initial position. And other times what you saw today is I'll simply take half my profit and make sure I just lock it in for a nice trading day. And I try to average about 25,000 pounds every single day in my trading in profit. Of course, I will also have days like on Wednesday last week. I think I was down 32,000 pounds by the end of the morning, and then by the end of the day I was just down 15, 18,000, but I will have losing days as well. I just think it's very defining for me as a trader is that I don't let those losing days override my sense of what I need to bring to the trading to act in my own personal best interest. And be able to, in order to be able to do that, I need to, I need something which is not just technical analysis. So to me, it's no good that I can cite all these percentages about there's a 50% chance we've seen the higher the day or the lower the day. It means nothing to me. Everything that is to me paramount is where can I get in and where can I get out and where's my safest entry.
Okay, well, that's some chunk of change that you just shared with us that puts my weekly earnings in some perspective there. Okay, so here's the next question.
I've done this for a long time, Rose.
I just made a withdrawal last week, and I had to have my broker confirm it 3 different ways. I'm like, come on, I'm just withdrawing a tiny little amount, just send the money. So now I'm hearing you how much you're withdrawing. I bet they would have put me on 1 month, delay for if I wanted to get that kind of money out of my account. Anyway, so how does Tom train his mind
would you
for
mind if
trading
yeah,
psychology?
do you mind if I just digress for a second? Because I think it's
Sure.
really important. You know, yeah, I make a lot of money trading, but I don't have any humongous trading account. Do you know why I don't have that? There's one specific reason, and it's all to do with how my mind treats complacency. If I have a big account, I'm much more likely to be sloppy in my trading. And I noticed this on the trading floor over the 10 years, is that people had the highest percentage chance of losing the day after they've had a good day of winning. And so I make sure that I don't have a lot of money on my trading account. Of course, I have enough to cover the margin, etc. Obviously, I probably have more than most, but it's not like I have $10 million on my trading account, because I've had that before, and I found that it lulls you into a false sense of security where you're thinking, oh crap, that was a bad trade, but let me just double up. I'll hold it a bit longer. But by always trading on a shoestring budget, you are also much more inclined to be disciplined. And I think it's really important. One shouldn't underestimate the small account. The small account has every bit as potential to make big money as the big accounts. We always think, oh, the hedge fund, or they have big accounts. But hey, it's not about the size of the account. It's the size of one's conviction when you are trading. And that's
This is
where
true.
yeah,
And if I
sorry.
can add a little bit to what you're just saying, is I'm a small account person. I was explaining to the trader members just Friday, I start every month with $2,000. I know it's ridiculous, but it's just that it puts me in a discipline so I don't have to trade too many times, because that used to be my problem. I would overtrade. I'm that little squirrel, going for the nuts, and it's so easy to lose. So I made a decision that if I start with $2,000, I can spend the first couple of days looking for a swing trade. So maybe 1 or 2 trades I can do well and grow that account. Then I can take risks and start to scalp rest of the, maybe the week, the next week, or the following weeks. So building that account is important, but obviously if you have a lot more cushion in your account, you can take a lot more bigger risks. So there's nothing wrong with that. But I want to ask you a follow-up question. How often do you trade? Do you trade every day? Do you trade every day the same instruments? Or, you do well in one day and you take a break maybe? How does that
No,
work?
I trade every single day, but
Okay.
I have a pre-market routine, which is an intense. Uh, it often, almost often, it will involve either physical exercise, or it will involve a brisk walk, and it will also involve meditation, visualization, and the ability to neutralize my mind. I need to go into every single trading session with a blank mind. And this is what spiritual gurus would be calling being in this moment, right here, right now. I cannot have any luggage, baggage, I think it's called. I cannot have any baggage from the day before. I must have washed my mind of all the chemicals that has been induced from a very heavy trading session where perhaps I made a lot of money or I've lost a lot of money. Whatever I've done, whether it's losing or winning, you can be darn sure that my mind is going to be full of chemicals. For example, if I've had a bad losing day, I don't sleep so well. If I've had a good losing day, I don't sleep so well. Because my mind, the adrenaline is pouring, or the nephrin, I think it's called, or it could be even, or if I'm losing, it would be the cortisol. And I think I'm probably one of those. I don't hear many people talk about it, but I think it's because I spent so much time on the trading floor observing so many people with the bestest of intentions simply just mess up their financial future because they couldn't control their own emotions. And someone like you then, I've listened into your technical analysis, Rose, and I'm a midget. I'm a midget compared to your knowledge in technical analysis.
Okay, I'm blushing.
But I'm not flirting with you, girl. I mean, I could, but I'm not. No, I mean it. But what is important to remind you of is that you don't need more technical analysis. You need more faith in what you already know. The will to act is more than important than any other aspect of our careers as traders. And I find that unless I go through have you ever seen that tennis player called Nadal, Rafa Nadal? Yes, I happen to, yes, well, brilliant tennis player, but it is insanely hilarious to watch his pre-serve ritual. He's run his fingers through his hair, and then his forehead. He touches his nose, and also the way that he lines up the water bottles. And to the untrained eye, you think he's just a quirk, but to the trained eye, and I call myself a trained eye in this respect, what he's doing is he's creating a rigid structure in his mind so he can focus on this moment right here, right now. I have a brilliant example of that. During Wimbledon 2007, I was invited by Ralph Lauren to their hospitality tent. I have no idea why Ralph Lauren invited me, but he'd see me on TV, and I'm the worst dressed person in the world. So there I am, and I get to sit next to the world's number 9 at the time, a golf player called Luke. God, I always forget his surname. It'll come to me. And so I'm sat there, and at the time, Tiger Woods was number 1 in the world. And I had a little bit to drink, so I asked Luke Donald, his name was Luke Donald. I asked Luke Donald, why are you number 9 and Tiger Woods is number 1? But he took it in a really good spirit, Rose. He said, the reason why Tiger Woods is the best in the world is it's not that he's got better skills than me. I think I can hit that golf ball just as far as he can. I can probably even hit it far further. But what Tiger Woods has that none of us has in the quantities that he has, he's got a goldfish mentality. He can badly mess up on the 15th during putting. And then on the 16th, he's forgotten all about it when he's teeing up. But if I mess up on the 15th, I'm still carrying it on my way to the 16th hole. And when I'm lining up my shot, I'm still thinking, why did I mess up so badly on the 15th? So this ability to completely wash your mind from whatever happened before is one of the inherently most important traits, much more important than whether you are a brilliant price action analyst or not. And you only ever get to that level by repeatedly practicing and putting yourself in a meditation state or a visualization state. You're putting yourself into an area, what I call the dark corners of your psyche, where you really pressurize yourself into imagining things where it's not going your way. And then you are beginning to replace that with, hey, I am really doing badly here. I'm going to replace that action that I normally do with the desired action. And I know it sounds really mumbly, blumbly, hippie-like, but I have now traded live for 4 years and people have been witnessing it. And you don't have this kind of performance that I have without having a rock solid mental framework and foundation. You just don't.
Great answer. Okay, so I have two questions, but they're kind of related to one another. I know, we might be running out of time here, but here is the question, number one. What is your advice for newish traders regarding paper trading versus trading real money? I understand the psychological differences, but would you advise it is better to start live trading with even £100 in an account rather than prolonged paper trading? Also, what are your thoughts on backtesting? Essential, or is forward testing on a live account with a small balance a decent, better option? And then the second follow-up question is, how long did you take to grow your small account into a sizable one?
Okay, there's some great questions. Let me start off with the back testing and forward testing. One of the detriments you can have when you are presented with a strategy is to get an A4 piece of paper that says, well, this setup has a 60% chance of succeeding. So what does that mean? I still need to handle 40 losers out of 100. Am I mentally equipped for that? So when I test scenarios, Rose, I do it manually because I need to feel that every single bar that comes after my setup, what would I have done here? So it's a shame you haven't got a camera, but I went up to the local print house and I got 7,000 trading days printed out on an A3 sheet, not an A4, but A3, which is bigger. And I did that because my eyes are getting older, and that would enable me to truly see these things. And so my weekend work, for example, the things I have shown you here on the screen, that's actually the result of me sitting with a pen and paper, testing manually and trying to figure out what would I do here? How could I have made money from this move? And that leads me on to the next question, paper trading. There's nothing wrong with paper trading, but you don't learn from paper trading. You might learn how a platform works, and that's great. But trading is learned by holding positions. It is when we hold positions that we truly learn about ourselves. And it doesn't really matter whether you need to trade at a size that is just marginally meaningful. So if you can find a broker where you can trade a penny a point or a cent a point, if that doesn't mean anything to you, then it's the purpose of the account isn't there. You need to trade so at least has a little bit of meaning to you. And I would not recommend paper trading simply because it will not elevate your game because it's missing the most vital part of trading, and that is the mental aspect of it. You don't, I don't know, I think I have a slide here. You can just, I did come prepared, you see. Where is it? I think it must, sorry, it's on another. But
that's okay, take your time, we're here.
But basically I'm saying you're not a losing trader because you don't know enough about technical analysis. You're a losing trader because you don't know enough about yourself. And you only truly learn about your limits when you have positions on. So that would be my answer.
Thank you. What specific things do you do as far as looking at the chart before the markets open?
I don't look at charts before they open. That has no use to me. I need to be mentally prepared. So say that you have an hour at your disposal. Do you spend that hour on chart analysis or do you spend that hour on mental preparation? And to me, mental preparation. If I have a little bit of excess of time, I will spend it on looking some charts.
What is your morning routine like, Tom? That's me asking.
Okay, so my morning routine is I start very early and I will then often do really strenuous exercise. And the reason why I like to do strenuous exercise is because there are certain exercises that are scientifically proven to increase the levels of testosterone in your body. And, you know, I'm not a young man anymore, Rose. And so I'm 53. And so I need to be very mindful of the levels of testosterone in my body. And I feel that I need testosterone to act decisively. So heavy weight training is really good at elevating the testosterone level, which as we age tends to just decline 10% a year from age 40. At the age 18, testosterone at its peak, but after 40, we tend to lose 10% a year. And so that's one thing that I will do once I've then done my exercise. The second thing I'll do is, and I wrote a book about it called Best Loser Wins. And this is not an advert, because when you buy my book at Amazon, there's only one person that's getting rich from that, and that's Jeff Bezos. It's not me. That $1.50 that I receive for every book. But I wrote that book because I wanted to describe the mental process that I go through. And I think there are two things that are more important than anything else. I have what I call the Book of Horrors, and that's my past. It's a PowerPoint presentation, and it's and it could be the one that you're seeing right here. Do you see this trade here? Let me show you this one here. So for example, this is a DAX trade that I did earlier on in my Telegram channel. I bought it right here, and I had a stop loss at 260, and the market goes 259.65. And so a chart like this would make its way into my Book of Horror. And it's a Book of Horror that is simply just charts that I go through of my old trades that I then sit and I absorb before the trading day starts, so that I'm preparing my mind for all eventualities. Because the last thing I want is to begin to chase the market or be scared or be nervous. I mean, in fact, today I think is a really good example. You all witnessed me selling short the Dow a couple of times whilst the S&P 500 and the Nasdaq was rallying. And you might have been sitting there thinking, why doesn't he just buy? He should just buy it. He should just buy it. And that's where I needed that mental preparation to be able to say to myself, hey, you might have to sit out a few of these 5-minute bars, but just be patient. There will be an opportunity. And then the opportunity came and we made another 40 odd Dow points. But you need a real, I need to have prepared my mind for all of these eventualities. Otherwise, I'm just like a ship without an oar. I'm just flapping in the wind, and I have no real direction, because my mind left to its own devices will simply run riot.
Okay. Okay. What is his favorite European futures? FTSE or DAX? Or etc.
You know what? They're two siblings, and sometimes they're like two girls, and you go through the ball. You go to a dance with them, and sometimes you want to dance with the DAX because she jigs and she jives, and the FTSE's just sat there on the bench doing nothing. And other times the FTSE is full of life and the DAX is boring. So you sort of you don't always get it right, but I try to trade the one that actually is the one that's got the most life in it. But absurdly enough, one of the best scenarios I can imagine is, say that the FTSE is struggling whilst the DAX is strong. To me, that's always a clear-cut sign that I need to be short the FTSE, or vice versa. Say that the FTSE is really strong and the DAX is just floundering a little bit. It's not really participating in rallies. That's for me. I'm going, oh, you need to find a place to sell short the DAX. So I use this what I call the intermarket relationship to also get a sense for, which one do I want to be? Do I want to be short one, or do I want to be short another? And I use the way that they interact with each other. Of course, I don't always get it right, but I get it right enough to want to continue to use that as a barometer for which product to trade.
Okay, well, thank you. You all have more questions, everyone, or?
I think it's a good time to finish here as well.
Yeah, I think so too. I mean, not that I think so. I shouldn't say that. We don't want you to leave for sure. What am I saying?
Quite all right. I didn't take it
but
as
I'm
a
worried about your, but go ahead. I'm sorry.
No, I didn't take it as an offense. Not at all. Not at all.
I need
Thank
coffee. Okay. I'm not seeing any other questions, but there was one question. Will you be coming in more frequently and sharing your trades with us?
Depends entirely on you lot. I don't think I can answer that question. And he might go through the record and say, you can't swear. Maybe I'm not invited back. But I'm pleased with it, because I'll be honest with you. I hold Al Brooks in very high esteem, and I wanted to do well here, and I was nervous. I can stand in front of 10,000 people and talk blah 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 blah, but there was something about this. I felt like I needed to. It's like that first date, isn't it? You just want to, oh, I just want to, I just want to do it so I can get it over with.
No, that's I think that's normal. Like you said, you were out of your comfort zone, and people don't like change. We know that it's part of our nature, but we were really looking forward to your arrival today. So I think it was great. I learned a lot. I'm sure everybody else did. So we really thank you for your time and sharing your knowledge and skills and your experience with us. We appreciate that.
Thank you so much. And thanks for the invitation.